All right, listen up. The market right now is coiled like a snake, and if you're not paying attention to the right levels, you are absolutely going to get run over. Let's break down exactly what's happening.
I said it this morning, and I'll say it again. The opening bell is a cage fight. You've got the S&P 500 barely keeping its head above water, and we are counting down to a 0 hour this Wednesday that frankly most of the retail crowd is just flat out ignoring. This is a critical moment.
So, what's the tape telling us? Well, it's telling us the market's in a high-tension crouch. That incredible recovery we've been writing, it is just slammed into a brick wall of sellers. Let's dig into the numbers and see what's really moving under the hood.
Okay, look at this divergence. It tells you everything you need to know. The S&P is slipping into the red, but then you look over at Brent crude, it's just ripping higher. That right there, that's the market pricing in pure conflict. Meanwhile, gold is heavy, Bitcoin is just treading water. It's a textbook sign of massive uncertainty across the board.
You know, these two charts right here, they perfectly capture the internal tug-of-war happening in this market. On one side, you have the S&P, just stalling out, losing all its momentum right near the highs. And on the other side, you've got Brent crude breaking out with absolute force. Now listen, these two charts can't both be right. One of them is lying, and we're about to find out which one is telling the truth.
So you're probably asking, what's the real trigger here? I can tell you what it's not. It's not about earnings. It's not about the Fed. Right now, we are in what we call a red folder window. And when that happens, all the normal rules of the market, they just go right out the window.
Now, for those of you who haven't heard this term before, a red folder event is simple. It's when some massive geopolitical event comes along and completely overshadows everything else. All the fundamentals, all the earnings reports, they become irrelevant. All that matters is the outcome of that one single event.
Forget your weekly charts. This is the only timeline that matters right now. We are in the final countdown to that US-Iran ceasefire deadline on Wednesday. From here on out, every single tick of the tape is a bet on one of two very different outcomes, a last-minute diplomatic deal or a major escalation.
And look, make no mistake, this isn't just some temporary price spike we're talking about. The International Energy Agency, they've come out and officially declared a structural energy crisis. You know what that means? It means high energy costs are the new baseline. They're here to stay. And you'd better believe that's going to bleed into every single earnings report for the foreseeable future.
Okay, so let's zoom in on the map. Let's go to ground zero for this whole crisis, the Strait of Hormuz. This is the physical choke point where this entire global drama is playing out in real time.
25%. Let that number sink in for a second. A full quarter of all the world's oil that travels by sea has to pass through that one narrow strait. And right now, every last drop of it is at risk. The ultimatum from Washington could not be clearer, and they haven't backed down 1 inch. The warning to knock out every power plant and bridge, that's the final card on the table. There's no negotiating from here. It makes this a truly binary market. Either we get some kind of diplomatic miracle or the lights go out. Period.
So what this all boils down to is two warring camps in the market, two completely divergent paths. And right now, you have to pick a side. You are either a bull or you are a bear. There is absolutely no room for sitting on the fence.
So let's lay out the two cases. The bulls, they're betting on what you'd call a peace dividend. They think the sheer weight of that power plant threat forces a total surrender before Wednesday. If that happens, you get the algorithms triggering a massive squeeze higher. We're talking back towards 7,200 on the S&P. But the bears, they see this whole run-up as a classic bull trap. They think it was all built on the hope as a deal that's not coming. And if that ceasefire expires, they're looking for a serious liquidation event, sending the S&P tumbling back towards its key moving averages.
So, the big question is, how do you navigate this mess? The answer is you don't. You don't try to predict the outcome. You prepare for both. This is all about risk management until we get some clarity.
Let me be crystal clear about something. This is not the time to be a hero. Your number one job, your only job right now, is capital preservation. It is the only trade that pays when the warships are active.
So here are the rules of engagement for the next 24 hours. First, you respect the moving averages, the EMA and the SMA. Second, you keep your eyes glued to that $98 level on Brent crude. Third, do not trust the headlines. Watch the tankers. And finally, and this is the most important one, trade small and use tight stops. No exceptions.
All right, get a pen. The first number you need to burn into your brain is 6,769. That is the 50-day exponential moving average for the S&P 500. Think of it as the market's first line of defense. If we lose this level, the bears take control of the short-term trend. It's that simple.
Now, here's the second number. This is the big one, 6,683. That's your 200-day simple moving average. This is the ultimate line in the sand for the market's long-term health. If this level breaks, believe me, we are not talking about a simple correction anymore. We are talking about a major, fundamental shift in this market.
So that's where we stand. Everything, and I mean everything, comes down to the next 24 hours. A diplomatic breakthrough that sends this market screaming higher, or a global supply shock that triggers a massive sell-off. The choice is that stark. Stay disciplined. Watch your levels. I'm Steve. The ledger is closed.